Hey, what's going on, y'all? It's Steve Peterson of Infinity Investments, and in today's video, we're talking about why sometimes paying capital gains taxes is not the end of the world. Now, if you know me and you follow me, you know I'm a real big proponent of 1031 exchanges in the real estate world. Absolutely believe in 1031 exchanges. I think it's something that you absolutely want to do if you're going to be selling an asset. However, I want to address the fact that sometimes you are going to pay capital gains taxes, and it's not the worst thing in the world, okay? And there's 3 points that I really want to hone in on why sometimes paying capital gains taxes is not that bad. Number one, okay? Having a pile of cash at the right time, right? At the right time can help make you a lot of money. And here's what I mean. I'll give you an example. I had a client that back in 2007 pretty much sold all of his buildings, and he sold at the right time, made a lot of cash, and he did not do a 1031 exchange at that time. Very shrewd individual, been through a few market cycles, and he told me, he said, hey, look, I didn't do a 1031 exchange at that time because there was nothing that I could buy in the marketplace that made any sense. Okay, when he was exchanging, looking for property, it just nothing made sense. And he said, look, you know, something ain't right here. Let me sell these buildings, sit on this cash, and when the time is right, I'm going to come in and start buying buildings. So he sold a good majority of his properties in 2007. And guess what? He had several $1 million to play ball with come 2009, 2010, 2011, right? So he timed things pretty good, okay? And it wasn't like, okay, he's an economic genius or he had a crystal ball. It was a simple concept. All he said is, look, I couldn't buy anything that made any sense. So, you know, I wasn't going to put, you know, money in a deal that didn't make economic sense to me just to not pay capital gains taxes. So sometimes, now not all the time, sometimes paying that capital gains tax and having the cash where you're not restricted. The only thing that I don't necessarily like about 1031 exchanges is the time restriction. Okay, because you know there might be a great buying. It might not be a great buying time at the time when you sell. All right. So in that particular instance, it made a lot of sense to pay capital gains taxes. Now I'm here in the state of California, right? The thing you got to remember, and I'm not a tax person. You talk to your CPA, get you some good tax advice. But here's what I know, right? In this beautiful golden state that we live in, you're gonna have to pay feds, the IRS their share, and you have to pay the Franchise Tax Board their share of the capital gain. Okay, so make sure you talk to a CPA before you even think about selling a property to figure out what that is. Okay, but the first point is, hey, having a pile of cash at the right time can make you a lot of money. All right. Number 2 reason why sometimes paying a capital gains tax ain't the worst thing in the world is that you want to avoid making a bad investment decision. Okay, simply to not pay the taxes. All right, because here's the deal. When you sell that property that you've been thinking about selling, and now maybe you tried to exchange, you're in an exchange, and you just can't find anything that makes sense. Day 43, day 44 rolls around in your identification period. You get a little bit desperate, all right? It's easy to fall into the trap. Well, I just need a deal. Give me anything. Give me whatever. You know what I mean? Let me just slam something in there, right? And the problem with that, guys, is that, I'll go back to the Great Recession example. I know a couple people. There's one gentleman in particular. He sold a property and 1031 into a building. And, you know, that building, top of the market, you know, bought it not to pay taxes. Things didn't really work out. And, you know, lost the building, and not only, you know, lost the building, didn't make money, and had a tax liability, you know. Had he sold and just held on to the cash, he'd be in a position to swoop up some of those distressed properties that were coming about. Okay. Now, I'm giving you something to think about here. I want to say through this video, I believe in 1031 exchanges. I do a lot of them for my clients. I've done them myself, and it is a great way to go. Okay. But you get down to day 43, 44 of the exchange, I personally don't think it makes sense for you to then just slam any deal that fits, and because you don't want to pay that capital gains taxes. Knowing though that especially in the state of California, those amount of taxes are significant. And in fact, there's people, companies, whole entities leaving California because they're sick and tired of all these taxes and rules. I'm not a fan of it, but it is January and it's 70 degrees outside, so I love it here. But there are some taxes that you'll have to pay. All I'm saying is that don't buy a bad property that doesn't cash flow, that's not what you want, just to pay taxes. And there's a guy I know, Ron Ricard, IPX 1031 Exchange. He always says that you're not doing a 1031 exchange to defer taxes. You're doing a 1031 exchange to acquire a better asset, okay? To acquire a better asset. Not just to take something that you had and sold and then buy a piece of crap, all right? You would be better off paying the tax, Uncle Sam and Uncle California, their taxes, having the dough, then to make a shrewd investment decision, all right? That's the point I want to make, and if you are going to do a 1031 exchange, we need to plan this thing out. We need to say, what does the better asset look like? Okay, before we even list the property and put it on the market, we need to be thinking about that. Okay, and I've had clients say, we'll figure that out once we get it sold. I don't want to commit to anything on the buy-in until I know this deal's going through. And my point is, I understand where you're coming from. We can build contingencies into a contract if we get it, but we can make that contract subject to the 1031 exchange. But we got to start looking now, because even when you list the property, the official's clock for identification doesn't start ticking until you close escrow. But when I list a property and I know it's going to be part of an exchange, the clock in my mind begins to tick. So I want to start knowing exactly what that ideal next property looks like for the client. And we want to start looking for that even before we've closed escrow on the next deal. Very, very important, because point number 2 is you don't want to avoid capital gains taxes and buy a building that's a piece of crap. Don't do it, all right? And this is coming from the guy who gets paid to sell buildings. You know what I mean? My business is not so much about making commissions as it is about building relationships. Because if you build relationships and do well by your clients, the commissions will keep coming and coming and coming. And that's what I'm hoping, right? So that we do a deal, you get into that property that you make money, and it was a great move, one that a property you can pass on to your kids or your grandkids and say, and with confidence that this was the right acquisition, this was the right thing to do. Okay, so that's point number 2, is that you don't want to just avoid paying capital gains taxes so you can buy a piece of crap. All right. Point number three is that a lot of people will tell me when I'm talking to them about selling, I just don't want to sell because I don't want to pay taxes. And I don't want to do a 1031 exchange. I'm not going to do a 1031 exchange, but this property I don't want to sell because I don't want to pay taxes. But we're having that conversation usually because there's something about the property that they have that's bothering them. And let me just tell you, around here in the Bay Area, it's usually the tenants. Okay, the tenants, the toilets and the termites and all the issues that you deal with as a landlord, right? And sometimes, if you own a bunch of properties, there's always that one, right? There's always that one tenant or that one building or that one recurring plumbing issue or just something that is bothering you about that building. And it's a thorn in your side every day you get up. It's just sticking you, right? But you're not going to sell because you don't want to, pay the taxes, right? I don't want to pay those taxes. But if you sold and you paid the taxes, you're only paying taxes because you made a gain, right? You're not paying taxes on the loss that you took. You're paying capital gains taxes because you made a gain, right? And sometimes if you made that gain and you took it and you invested in something else, another building somewhere else, or if you said, hey, I'm done with these buildings, you put it in an annuity and some of these other tax deferred options. And I'm a real estate guy. I'm not an investment, stock investment, guy. But the bottom line is, if you have a problem with something, or it's a thorn in your side, sell it and make a profit, pay the taxes. Now you got some cash. Maybe you want to buy another property, or if you say, hey, I don't want to buy another property. Maybe you want to invest into a business. Maybe you want to buy gold, or maybe you want to buy cryptocurrency. Maybe who knows what it is. But life is too short to be stressing out over something, and then not, eliminating that stress because you don't want to pay taxes, man. You know what I mean? And I'm saying that, truly, you might say, I want to sell this property and I don't want to buy another property, right? which I would love to sell you another property. But if you say, I want to sell this property, I'm going to go buy some stocks, or I'm going to go buy a company, or I'm going to go buy some gold or Bitcoin, you know what I mean? Well, that might be better for you than just keeping that property that's sticking you in the side every night, right? Lowering your stress level, by the way, helps you be able to think better, make wiser decisions, and just if you're able to think better and make wiser decisions, your investment portfolio is gonna positively benefit from it. So so consider that, guys. Now, if you're gonna sell your property, I believe you should be doing a 1031 exchange. And if you're gonna be doing a 1031 exchange, and that's what your heart is set on, then you need to sit down with someone like me, a commercial real estate investment advisor, who's going to sit down with you before we list the property and go over the options, come up with a plan to find that replacement property and get you in there. All right. Very, very critical. But I hope this helps. Give me some feedback. I know there's somebody out there saying, Steve, you crazy. We ain't paying no capital gains taxes. I want to hear that. Let's have this dialogue, you guys, because we're in an interesting time in the market. These conversations need to happen. We need to, bring value to ourselves, our portfolios, the people that we're serving, if we're landlords, if we're brokers. This is an important time, y'all. Hope this helps. Like, subscribe to the station. Let's stay engaged, and best of success in your investing career. Peace out.